Hi and welcome to the Market Alert for Tuesday the 5th of April 2022. So today's fundamentals and news is bullion, big tech and black gold bid yesterday. Bitcoin battered as bond curve steepens, the reacceleration of the recession and QE trade behind it. We've got this headline as well, still a bear or market rally, asking the question. For me, I think we're going up. I don't think they want this to fall apart, and they'll do anything they can do. If they wanted to fall apart, they've got the perfect excuse already with the war with Russia and Ukraine and the impending and looming recession. So for me, there's still the market to go back towards the highs. Retail, freight, and now semis on the verge of recession. Yeah, didn't make any difference yesterday. A bit of a wobble at the start. Markets moving back to the upside. And commodity news, we've got commodity crucible, US coal hits record highs, French power prices go limit up. The global commodity crisis is getting worse by the day and will get worse as we progress as well. Meanwhile, other news today, we've got ISM manufacturing. That's the only one today that's coming out forecast higher. That's inflationary if it does come out at this sort of number. And in the metals gold silver ratio moving back up towards the 80 level. Expect this to go higher back into the areas that we see across here as silver is still coming under pressure again, which we'll look at in just a moment. So let's have a look at the Dow for yesterday, and we can see that the market moved higher. No surprise really. It looks like we've got a bit of weakness overnight at the moment. We could see a bit of a down move. There's no news this week, as we discussed yesterday. When I say no news, there's no central bank news, no Fed news, no FOMC, no non-farm payrolls, no CPI, those sorts of economic news items that would actually move prices. So there is the option for a bit of weakness for today. The market tends to factor in the news from the weekend on a Monday. Tuesday, it then is generally directionless. Yesterday, the market moved lower to begin with in the pre-market session, but then rallied ready for the opening of the Dow. As I've mentioned before, they do this. This is the pattern. Then the cash market opened, sailed to the downside, but recovered within 30 minutes of actually doing this, and then we managed just to move to the upside. That same pattern that you see there. It's actually like a letter K, isn't it? You can see there, you get that down, and then the market moving back. Overnight, the market needs to take out the close and head back towards yesterday's high if it is to continue to move to the upside in the daily chart, where we're expecting resistance at all of these levels here for the Dow. If you trade the Dow, that's the upside targets where you can expect some form of resistance. In the German DAX, similar picture yesterday. The market managing to move back to the upside. We had a wobble to start with. Market open moving low. We'll look at that in more detail in just a moment. We're struggling with that 50 EMA, the blue moving average line there, and also the 50 and 38% retracement there. Mainly the 38 is the one giving the market some grief there at the moment. In the 30-minute chart, you can see what I mean. We've moved up. As I said, we wouldn't take out the high in the pre-market session. We did that. Then we opened and we just sailed down 150 points. Market found support. You've guessed it. Friday's low. Very important area. You get all of the criteria here. You've got all of the volume. You've also got the stochastics oversold, and importantly the low. The low carries a lot more weight than any other pivot point. Well, not that it's a pivot point, but the previous day's low, which we've got actually written into the pivot points, because the previous day's low is really important in a bull market, because if you can get down to this area, you've got a good chance of moving the market back to the upside, which is precisely what they did, and they brought it back to the high once more. 200 MA is giving the 30-minute a bit of grief there. We're oversold, and the market has moved down overnight till we're overbought and then to oversold. The market has attempted to move higher, but a close below that the 50 bar moving average, and then the DP would be the first port of call for this market to find some support, which could happen when the futures market opens, because we can see already that there is some weakness there, sideways channel building at the moment. How it looks in the smaller time frame for yesterday morning, you can see the price is trading up, overbought, crossover. We then turn red before the cash market opens, and then the market opened and sold off immediately. Again, all of the criteria is here. You've got demand at the low, you've got all of the other green bars, buying volume, oversold. Market then rallies, and then it comes back, retests the low just below it. Now this is a very interesting observation, because here you can see the market retested here, and then what happens is I've noticed of late, when you think it's just breaking to the downside again, they do this just to make sure that nobody else wants to sell, or they want to wrong foot traders. So you go short again, and the market then finds support, and the giveaway is the momentum is actually switching with the divergence, and then we get the retracement, and then we're free to move to the upside. And that, as you saw in the 30-minute chart, was how the market moved for the remainder of the session, and you can see there, and then continuing to move higher as the just before the Dow came on stream. A retest at the DP level. Look at the volume there as the market moved higher, and then for those very observant amongst you can see that when the Dow sold off 150 points, the DAX didn't, and that's another thing to watch out for as well. So if you have a chart of the Dow open at the same time and watch the Dow, that's falling out of bed. The German DAX doesn't, and you see demand coming in despite the fact that the market is already overbought. It doesn't matter because the market's sitting on the DP, overbought. The Dow's dropped 150 points, and yet this market continues to move up. Let me just show you what I mean here. Let me just overlay the Dow chart if I can find it. There we go. So in the Dow, it dropped 150 points. In fact, let me show you this in the 5-minute chart, because it's the same time frame there then. So as the market kicked off, there you can see the Dow falling out of bed, and yet the German DAX didn't. It just sat on the DP. So a very important thing to look out for at 2:30, how you can actually gauge what the German DAX's next move is going to be by looking at the Dow. We know in the Dow that if they can move the market to the downside like this, they're going to, because they've already moved the market up. Again, if you go back to the 30-minute chart, they've moved the market up in the pre-New York session, offload the cash positions as the market opens, because they've already moved the prices up to capture a bit more profit before they sell, and then bring the market back. So watch for that pattern as well. In the currencies for yesterday, very quiet at the moment. Not spending too much time on this because they're stuck in a sideways range, and you can see this yesterday for the yen as well, just sitting there sideways after being oversold. Market brought back, and then just sitting sideways. Overnight, a bit more activity actually from the Asian market, and the market pulling back and starting to move, but it'd have to take out these areas of resistance here to get back to yesterday's high for the yen, and in the pound becoming quieter, although overnight moving to the upside, which is interesting because the dollar is also moving to the upside as well. And in the 30-minute pound, you can see how sideways this is. This is from here down to here is 100 points, and it's interesting because I can't see the 50 in between all of that. Where's the That's because I'm looking at the wrong thing. So yeah, no, it's only 50 points. It's the looking at the wrong thing there. I'm picking up one of these resistance areas. There we go. So yeah, that's those two lines there. Not even 50 points for yesterday's, about a 30-point range for the pound. So really quiet, but moving off the DP overnight there after being oversold there. And finally, in the metals, interesting day yesterday as they continue to slam the price of silver. They did manage to do this again yesterday. Let's just spread this out and have a quick look at where we are. So from there to there, the market coming back to 78% yesterday for the silver market, down to it and holding and trying to get back above that 50 EMA. Also attempting to do that now, but becoming very quiet at the moment. So from there to there on the upside, we've got these areas of resistance to break through there. If we just expand this a bit so that you can see. So that's what we're looking at. Currently at the 38 there, and the other areas of resistance should silver prices be allowed to move back to the upside. A lot of volume yesterday and we're oversold. Technically, from a chartist point of view, it could move higher, but we know that come lunchtime we end up with this, where we get the 1 o'clock LBMA fix, where they like to slam the price down. They did. The only thing that I will say, they're struggling without pouring hundreds of thousands of contracts into the market at the moment to move the market to the downside. It seems to recover quite well when they do these slams. So yesterday the market taking out Friday's low. I thought we were going to go down to 24. I still have an order below 24 just in case, but at the moment we can see that in the 30-minute chart we've gone from being oversold to making our way back above the DP at the moment and the 50 EMA. So on an intraday basis, we can see there we've got this area of fibs to get through before we get to yesterday's high, should the silver price be allowed to move to the upside. Gold also sideways as well at the moment. Not a lot to discuss there. The volume's still quite high in this market, and then the dollar also has been moving to the upside as well. A bit of weakness coming there at the moment overnight. And then finally, for today's alert, crude oil sitting at what would looks like a 62% retracement, 78% retracement, 89 there. And also inside of there, you've got another 89% where the market's tried to move higher. But at the moment, it's stuck in a range, and we're looking at $107 per barrel at the moment. Okay, that will do it for this one. Let's see what we get today. Like I say, stock market wise, no major news. They'll do their best to try and move the market higher, but it's looking weaker at the moment on the overnight to move prices to the downside. If we just have a look there in the 5-minute chart, bit of weakness around at the moment. Okay, that's it. As ever, thanks for watching. See you in the next one.